So hi everyone. So if you're planning to move to Spain, understanding the tax implication, it's critical. I talk to a lot of you guys, especially a lot of people based in the US, and a lot of questions keep on coming up, and rightly so. Question around, will I still have to file US taxes? What's the deal with the Beckham Law? And also for people looking to retire to Spain, how will my retirement saving be impacted? And so these are all valid questions, and it can lead to anxiety, uncertainty, especially when you're planning on completely moving from one country to another. So that's why today I'm incredibly fortunate to be joined by Robert from SGB Global, who's a fantastic resource. We have him for the next 40 minutes. We're going to be talking about everything from Spanish tax residency versus US tax residency. So make sure you stay until the end of the video, because at the end he has also some very good tips for you guys looking to move. But let's get started. So first of all, Robert, thank you for joining me today. If you could tell me more about your background. I know you're an expat yourself, and what makes your expertise particularly relevant for Americans considering to move to Spain.
Yeah, so thanks for having me, Letitia. Yeah, nice to meet everyone. I guess I'm one of the senior advisors here at SJB. I've been with the company since 2018, so pretty much from the start. My Spanish journey's kind of started back in 2017, actually. Initially moved from the UK out to Barcelona, and then migrated down south, so I'm down in Andalusia, where our European head office is. I've been working in the offshore wealth management space for the best part of a decade, so pretty much seen it all when it comes to different client situations. We do specialize in the quite niche area of the cross-border wealth management. And for the last kind of 4 or 5 years, been primarily focusing on the US market, including US domestic and the US expats. With that in mind, we have licenses globally in the SEC and European licenses. Super important that with clients as mobile as ours, that we have those in place. And specifically for myself, I have my investment advisor license in the US, Series 65, and then I've also got the European equivalent. So I've got a good understanding of both markets, regulations, and tax as well. Now, we're not tax advisors specifically, but as wealth management individuals, we do need to have a good understanding of the tax rules, because that does ultimately affect the final advice that we give our clients, especially when dealing with US expats. I'm sure, as most people watching this will be aware, that the taxation rules can get quite complex. But rest assured, we've helped countless of Americans move into Spain, ultimately just trying to give them peace of mind when they do move, that they have, taxes, investments, etc. provided, and that they have a solid strategy when, investing compliantly in both jurisdictions, which is super important.
Brilliant. Well, let's get started then. Let's talk about what you just mentioned, Spanish. Like, let's look at the differences between Spanish tax residents versus US tax residents. So it would be great if you could start with a bit of the fundamental and explain how is tax residency determined in Spain, and what are the key differences or complexity that Americans should be aware when it comes to distinguishing between Spanish and US tax residency.
Yeah, so I think residence it's quite straightforward on the face of it. So from the Spanish side, to become a tax resident, essentially you need to spend more than 183 days in Spain during a calendar year. So I think for most people that's pretty straightforward to be able to calculate. I don't think too many people have issues when that with that side of things. Now with the US, obviously there does become the added complexity that US is more of a citizenship-based taxation, which essentially means that even if you do move to Spain, you're almost always liable to US taxes and filing, because they do tax on global income regardless of where you live. So Spain is residency based, US is citizenship based. There is double taxation there, but we'll come on to that a little bit later, and that can be mitigated due to some of the treaties that are in place.
Yes, and actually that leads me on to the Beckham Law, and I think everyone listening to us might be familiar with this term, but if you could explain what this special tax regime is and who is typically eligible for it, especially for US citizens moving to Spain, and it would be great to hear also what are the primary benefits and potential drawbacks of opting into it.
Yeah, so I think this has been quite popular for quite a number of years. I think off the back of obviously how it was called with David Beckham moving over to Madrid, and which is why this is called the
Oh,
Beckham Law. I'm sure most of you are aware or not aware.
no, I didn't know.
Essentially, it was a way of attracting foreign professionals to Spain, and giving them preferential treatment when it comes to income. And essentially, there is the rules surrounding how that income is taxed. And with the Beckham Law, essentially means that only Spanish sourced income is taxed. The regime lasts for 6 years, and essentially it's just a flat 24% income tax on Spanish income up to 600,000. The rules surrounding how you can actually apply for it is you, of course, have to be a Spanish tax resident. You have to be a new Spanish tax resident. And why that's important is that you cannot have been a resident in Spain in the previous 5 years. And also you must be employed by a Spanish entity or assigned to actually work in Spain by a foreign employer. So you can't just move to Spain, apply for a Beckham Law, and not have that employer base in place basically. So I guess some of the benefits are that kind of exactly what you're going to be paying tax wise. They obviously don't have the increase in brackets. It is a reduced tax rate. And we'll come on to the tax rates a bit later, but for most Spanish income, it can go up to 47%. So having the flat 24% is obviously a massive benefit when it comes to any Spanish sourced income. Any foreign income is actually tax free, but when looking at things like distributions from 401ks, etc., that might be one of the drawbacks because ultimately most of it is from employment income, etc. as well. So it's important to understand that when dealing with Spanish and US taxes, that Beckham Law, depending on whether you're employed or whether you are moving into retirement, might differ depending on the strategy that you have in place. So I guess another one is also from being able to claim foreign tax credits, which I think we'll come on to a little bit later as well. But with the Beckham Law, there is no such thing as being able to actually claim foreign tax credits. And why that's important is because if you are, being taxed in the US on certain income, you might not be able to claim foreign tax credits through the Spanish system. So yeah, it's important to be aware of that with that 6-year period as well. It's important to have that strategy in place and determine actually whether the Beckham Law is the most beneficial visa or tax legislation that you should be on when moving to Spain.
Brilliant. And let's kind of talk about US tax obligations, things like FBAR and FATCA after moving to Spain. Even after moving to Spain, US citizens retain certain tax obligations. Be good if you could explain the primary US tax responsibilities for the tax responsibility that Americans living in Spain still face, and especially regarding important requirements like the FBAR and FATCA.
Yeah, so I think there's kind of three forms really that the majority of people we deal with have to still file for. I think most people will be aware that when you leave the US, as I mentioned earlier, you still have these tax obligations. That does mean filing. So the first one is your basically your annual income tax returns. That will be on the form 1040. So you do have to annually file that with the US, even if there is no US income. So that one's quite straightforward. Now you then come on to foreign asset reporting, which is super important for people to continue to be compliant with the US. So you first of all have the FBAR. Now that is essentially just reporting for foreign financial accounts. Generally, that's only if you've got a consolidated value of 10,000 or more, which I would say the majority of people on this webinar or people that we deal with do exceed that. So, of course, they do have to file the FBAR, which is through Form 114. You then have this FATCA, which is basically tax legislation to make sure that the country is talking to each other. And that's, again, another foreign asset reporting. But the threshold starts at 200,000 for that for expats. So there is two slightly different ones, but on the FATCA, for example, there's certain things to get around. For example, you don't have to file or register things like foreign personal residence or art, jewelry, and real estate basically directly owned. So those sorts of things don't have to be reported through the FATCA and the 8938, but all things like bank accounts, investment accounts, pensions, insurance products, everything like that does have to be filed through that FATCA document.
That's great because I think a lot of people are not aware when you're moving to Spain that actually there's a lot that you need to report.
Yeah, I think it's also important to know that if you hold property through things like trusts or some sort of foreign corporation, they do have to be reported under the FATCA. But if you own them directly, then yeah, they don't have to be reported.
Okay, brilliant. That's clear. And now let's kind of dive into taxation of US retirement account, thinking for 1K and IRA and Social Security in Spain. Many Americans that I spoke to tend to be, I think when you and I were discussing, over the age of 55, so they're coming and looking to move to Spain, and they'll be dependent on their retirement fund from the US and the saving that they've built up. So it would be good to understand, especially for them, how are these US retirement accounts as well as their Social Security benefits typically taxed when moving to Spain?
Yes, so obviously we're dealing with two different jurisdictions here and two different taxation systems. So if we look at 401ks and IRAs, which are generally called qualified accounts in the US, if we look at first of all from a US taxation perspective, when you take distributions from those qualified accounts, you'd actually be taxed in the US. When taking withdrawals on the income that you take at the US income tax rates. Now, Spain will also tax them, and I think what most people have maybe been told or have been led to believe that the double taxation agreement, they don't have to pay anything in the US and they just file it in Spain. But actually, in most circumstances with these accounts, you will have to pay tax at source in the US. And then you also pay tax in Spain. But the important thing here is that you can apply for things called these foreign tax credits, which is something that I mentioned earlier on in the questions, that you can essentially apply for a foreign tax credit to the US authorities for the tax that you paid in Spain. Now, there might be some disparity surrounding, because in regards to the income tax brackets, you might actually pay more in Spain than you do in the US, and you can only often get foreign tax credits for the amount up to you that you paid in the US, for example. So yeah, you'll pay income tax in the US on those accounts, you'll pay income tax in Spain, but in most circumstances, you can apply for these foreign tax credits to be able to get it back from the US authorities. Now, if we move on to then Social Security, for example, now I think most people will be happy to hear that you can still apply and get your Social Security when you get to the age. So obviously, depending on the age that you actually want to be able to take it, you can get it up to 67, or you can do that before that age as well if you want a reduced rate. Now, due to the treaty between the two countries, only Spain generally will tax your US Social Security benefits. So that is one of the benefits of being able to get Social Security as well. Now, with the foreign tax credits, as I mentioned on the 401ks, etc., you still have to go through the filing system. So even if you are doing all those other factors, NEF bars and things like that, you'll have to also do another form to the 8833 to be able to claim those treaty benefits essentially. But again, we can talk to a tax professional to help you understand what that would look like.
Brilliant. And then looking at when it comes to selling US-based property or investment like stocks, how are those capital gains treated and taxed for US citizens living in Spain, considering both US and Spanish tax laws?
Yeah, so I think I'll split this bit up into kind of two different sections. So because there are slightly different rules. So if we start with on the property side, there is a couple of different scenarios here, and what I've seen anyway from people moving over and contacting us. So let's just say, first of all, if you haven't moved to Spain yet, but you're kind of in the process and looking at places, etc., and you want to sell your primary residence, so it's quite straightforward to calculate the tax on that. If you look at the gain portion of your property as a single individual, you get 250,000 US dollars as a capital gain allowance, and then you have 500,000 if you actually are married and filed jointly. So you have a nice buffer there to be able to have that capital gain allowance. Now, there is a couple of caveats to that you have to have lived in your home as your main residence for the last 2 of the 5-year period before the sale. But I think in most circumstances, if you're selling your primary residence, that is often the case for people. So that's if you if you haven't quite yet moved to Spain. Second scenario is that you've already packed your bags, you've moved to Spain, you're a tax resident in Spain, and you're then looking to sell that property or your old main residence in the US. Now, Spain does tax on your worldwide gains, so normal capital gains tax rates apply from the first dollar essentially. Let's say you have a $500,000 property. And you've got $100,000 gain, then you'll be taxed at the relevant rates for Spanish taxes, which start at 19% up to the first 6,000 and goes up from there. But one of the ways that we've been helping some of our clients recently is through something called reinvestment relief. With reinvestment relief, actually, there's been a way of if you're selling your main residence in the US and you can claim that again you lived there for 2 of the last 5 years before the sale, you can actually defer the capital gain on the Spanish side if you are reinvesting that into a new primary residence in Spain. So rather than potentially having to pay that, could be quite substantial tax bill in Spain, you could actually reinvest that into a main residence in the 2-year period after
Okay.
you sell your main residence in the US. to then be able to live and hopefully defer that capital gain. So yeah, that's a good way of potentially saving money if you are looking to fully ship your life and over to Spain and set up camp here.
Yeah, no, definitely. I think this is a good option to have in mind, and then later we can talk about other tax efficient investment vehicle that you guys kind of advise and that
Yeah, for
people
sure.
should be
So
aware of.
that was on the property side. I guess on the stock side, again, pretty straightforward. I mean, the US, I think most people will be aware of how the US tax system works. You have short term and you have long term capital gains. So short term is if you hold, any investments. This is outside retirement accounts, any, direct stocks or investment accounts, things like that. If you hold the stocks or assets for less than 1 year, you're actually taxed at ordinary income rates, which are, 10 to 37%. If you hold it for longer than a year, so the asset for longer than a year, then you do have it is long-term capital gains tax rates, which does depend on your income as well. But that can start at 0% and then it goes up by 15, 20%, depending on your income bracket. And again, whether you file taxes jointly or individually as well. So that's on the US side. But as I mentioned, it was Spain. They also always want to get their slice of the pie as well. So they will also be taxing you at capital gains rates. And as I mentioned, it starts from 19,000 for the first 6,000, and then it goes up to 21% on the next 44,000, and then 23% for the next 150,000, and it goes up from there as well. Again, foreign tax credits can be applied to this side of things as well. So it's not just income that foreign tax credits can apply to, but you can also apply for them for capital gains, etc. as well.
And now let's kind of talk about it would be great if you could give us a general overview of how US federal and state income tax bracket might compare to the Spanish income tax bracket and what's important for Americans to understand about their overall income tax burden when moving to Spain.
Yeah, so I think in most circumstances you can probably, from an income perspective, expect to pay more taxes in Spain than you will in the US. But the systems do work quite similar, that you do have essentially a national income tax in Spain, which is similar to US federal, and then you do have the individual jurisdiction state taxes as well. Let's say US federal income taxes start at 10%, and then rises all the way up to 37%. Spain is slightly more, and it's essentially 19% all the way up to kind of 45%. Plus, you then have the regional or state taxes on top of that as well. So, yeah, in most circumstances with those brackets, you'll end up probably paying slightly more in Spain. I think another thing that people often have questions about is wealth tax, which
Yeah.
does add on top of this. Now, this is done by regions. It's essentially a tax on your kind of net worth of assets, let's say, and it does depend on the region where you move to. So whenever people are moving over to Spain, it's always a question to help people understand potentially what the best jurisdictions are in Spain, depending on their net worth and their assets as well. So, for example, Valencia has an individual threshold of about 500,000 euros each, and then anything above that's actually taxed at progressive rates, which can go all the way up to 3.5%. But places like Andalusia, which is where myself and the SJB team are, and Madrid, don't actually have wealth tax. So that is also on top of for these other taxes that you might also see. And I know a lot of people read about that. So it's always worth thinking about that when moving over. But I guess the positive and the caveat to that is that whilst taxes are probably higher, the cost of living is a bit cheaper here, as I'm sure you're aware, Letitia, from living in London for a few years. So your money does go a little bit further here, even though there is that potential for additional tax.
Definitely. I mean, myself being based in Catalonia, which I know is one of the regions with the highest wealth tax, but I can see a difference that your money goes a lot further here. So you've got things like, like general things like food, etc. It's a lot cheaper. So there are a lot of benefits also when it
Yeah,
comes to living in Spain, when
absolutely.
in terms of what you get for
The
what
sun tax,
what
we
you earn.
sometimes call it.
Exactly, definitely. I'll take it anytime after having lived in
Absolutely.
the UK for 10 years, so for sure. And well, now talking about other taxes like gift taxes, gift tax and US estate, it would be great if you could also, this can be a bit complex, so explain how do US estate and gift taxes interact with or differ from Spanish inheritance and gift taxes, and what should American planning to live in Spain consider for their estate planning?
Yeah, so I think this is also quite a big question that we get asked surrounding inheritance. And the rules do differ and the systems do differ as well from the US to Spain. So US is generally on the donor that pays the tax for the estate and gift tax, and then Spain is often the beneficiary through the heirship rules. So that is one of the key differences between the two. Also, another key difference is actually the limit or the threshold before any sort of estate or inheritance tax is paid. In the US, it's substantially higher. So in the US, you have the gift and estate tax. I think it's about 13.5 million at the moment. That's for an individual. So obviously, if you're again married and filing jointly, that doubles. That's on the estate. But you do also have annual gift exclusions, etc., as well, which you can give in any given year before having to actually file your kind of gift tax reporting, let's say, and that's in the US at $18,000. Anything above that, you've got to report that through the 709. With non-citizens, etc., there's again some different rules surrounding non-citizen spouses and things like this as well. So I'm not going to dive fully deeper into those things, but there are different rules surrounding whether you have a non-citizen spouse, for example, or people that you are gifting to. The thresholds are a bit different. For a non-citizen spouse, it's about 185,000 a year that you can gift, and that's just because they're obviously not in the kind of US system. But yeah, if people have those sort of specific examples where beneficiaries, things like that, on US citizens, then there might be some other avenues to be able to do some planning surrounding gifting, etc. Now, as I mentioned, Spain is based on the beneficiary. So the inheritance and taxes vary again depending on the region. So this is again why I come back to that choosing the region that you do go to is super important because of the wealth tax, income tax, and inheritance. Again, coming back to Madrid and Andalusia, you've basically got a 99% reduction on IHT. And Andalusia, you basically have a million exemption, and then 99% reduction on anything above the million. Yeah, it's pretty safe to say that you won't be paying much inherit, or the beneficiary won't be paying much income tax, inheritance tax on those funds that they've received. But in some other areas, you can pay up to 34%, on the first, on the first euro inherited. So that's also important, but that does depend on the relationship that you are to the deceased as well. Because that also is based on tranches. So whether you're, direct descendant or spouse or, an auntie or an uncle or anything like this, there's different tranches for the different types of relationships that you have to the deceased. And that will also put you in a different bracket on the Spanish side when it comes to inheritance. So yeah, the Spanish side can get quite complex. So again, it's definitely worth speaking to a professional to be able to understand what your current assets are, who the beneficiaries and where the beneficiaries are, which is also important, and then helping to understand what sort of planning you can do to help mitigate potentially some of those taxes on the back end.
And actually, you made a good point. So you were talking about regions, like you were talking about Madrid, that it's more favorable when it comes to, there's no wealth tax. But I'm seeing that what's happening a lot right now, a lot of my clients are looking at the Basque region. Like a lot of people are looking to kind of move around this place. So what can you tell us in terms of the Basque region when it comes to wealth? Are these like, when you make recommendation to your clients, is this a region that is more kind of favorable in terms of taxes?
No, unfortunately not. Unfortunately not. So now I've got a couple of clients actually in Asturias, and yeah, the wealth tax there is similar to Valencia,
Okay.
slightly higher, but yeah, it's similar where there's not thresholds like that. And in regards to the inheritance, that there isn't any
Okay. Exemption.
reductions or things
Yeah.
like that. But it is my understanding that a lot of these different regions are looking to be more tax favorable to
Okay.
try and obviously draw clients in. So, and that's definitely something that seems to always be in talks. But as I'm sure you're aware, with any bureaucracy when it comes to
Takes
Spain,
time.
these things do take a bit of time. So yeah, there are things in potential pipeline for some sort of national inheritance tax as well. But yeah, that obviously hasn't come into force yet, so
Yeah.
so I can't fully comment on that. But yeah, it's a very client specific, right? So if clients
Yeah.
come to us and tell us a specific region that they want to be able to live in because they like that specific area, then we can
Yeah.
base the analysis off that and help them understand specifically what the taxes are for that. But as there's so many regions, it's it's obviously dependent on those specific regions.
No, definitely. But I think it's a good starting point because I have a lot of people who come to me and ask me, okay, can you make a recommendation of where I should live? Looking to a cross-border financial advisor to be able to make an informed decision, not based on
Yeah.
maybe the weather, etc. That can be part of your final decision, but ultimately, how much will it cost you and what are the differences? I wanted to ask about some, tax efficient investment vehicle in Spain, so especially for US expats. So once they've settled in Spain, are there any specific tax efficient investment vehicle or strategies available within Spain for the US expat, especially, that they can utilize? Is there any limitation that they should be aware of?
Yeah, when it comes to limitations, absolutely, and I'm sure most of the people watching this will probably have felt it in some form or another, having restrictions on where and who they can invest with. So Spain does have tax deferred and tax efficient products called Spanish compliant bonds, and we use actually those for a lot of our clients. Unfortunately, for US individuals, they're not suitable, and the reason for that is because the investments that you're holding within these types of solutions for mutual funds and things along those same that same kind of process, and that actually comes under a rule called PFIC, which stands for Passive Foreign Investment Companies, which is something I try and educate my clients or my US connected clients about quite a lot. In simple terms, it basically just means any kind of mutual fund or ETF outside of the US if you're investing into that. So, and you'll be taxed punitively on that up to about 45% in the US on any capital gains. So it's not often worth it for individuals to often invest outside of Spain in these sorts, outside of the US in these sorts of products, because ultimately the tax on the back end is just going to eat away any sort of additional tax benefits that you can get. So for the majority of US citizens, we would look at US based investment accounts, avoiding foreign mutual funds, and looking into different types of offshore solutions such as fixed index annuities, which is something that we're educating clients on quite a lot, where essentially there is parameters in regards to the performance of these certain solutions. So you essentially put the money in, it's allocated towards something like the S&P 500. There's a cap of say 10%. So if the S&P goes up 13%, you would only get 10%, but the benefit of it is that there's no downside to it. So if the S&P drops off the face of the earth and we have World War III, then it would the floor is zero. So it wouldn't go down as much as the S&P. But the additional benefit of that is that these are tax deferred in Spain. So whilst it is within the fixed index annuity or these sorts of products that does grow tax deferred, those are we are working with US providers and vendors that can work with US individuals. So that's something that we helping individuals look at, and also things surrounding such as unit linked life insurance, which does have quite a lot of complexities to it, but that does have some tax efficiencies and being able to also protect your wealth, and also from a wealth preservation perspective and being able to pass on wealth efficiently as well. These sorts of products, whilst it can be quite complex, can often offer our clients some additional tax savings and really good planning for estates, etc. as well. So if people are interested in that, then we can perhaps do a slightly separate recording or webinar surrounding those sorts of solutions as well.
As an expat yourself also, and both of us being expat, but I'd love to wrap up and for you to give one piece of advice you give to American or any expat actually for that matter moving to Spain, that isn't necessarily financial related but purely about enjoying the experience.
Yeah, I mean, I think it's just a case of embracing the cultural shift. I mean, I think what people will find, and what I've found, is that life in Spain is a lot slower, but that's potentially the beauty of it. Learn the language, eat some nice food, enjoy
Yes.
socializing and meeting other expats and locals, and yeah, enjoy it. I think it's always sometimes difficult to picture yourself moving abroad and having all these complexities from a financial side and having the worries. But if you speak to individuals like ourselves who kind of took the leap to move abroad, it's probably one of the best decisions you can make. So worst case scenario, you go back to the US in a couple of years,
Exactly.
but at least you've experienced it, right? So but yeah, embrace the cultural shift and take the jump.
Totally, totally. I always say that to people who I talk to. What's the worst that can happen? Well, you go home, and that's
Yeah,
it.
exactly. Yeah,
That's it.
exactly.
Honestly,
Yeah,
that's
yeah. Yeah,
so
the
well.
US is still going to be there in a few years. Don't
Yeah,
worry, it's not
yeah.
moving.
Definitely, definitely. So, well,
Yeah.
thank you so much, Rob. I'll be putting all the information in the description, how to get in touch with you. And like I said, we'll be doing more sessions. But thank you so much. And for those of you who have come all the way to the end, you can put your question at the end, and I'll be giving you the information to get in touch with Rob, anyone at HEB Global. So, thank you so much, Rob.
Thank you very much. Have a good day.
Thank you.